Welcome to the My Amazon Guy podcast. I'm your host, Stephen Pope, and founder of My Amazon Guy. Today, we're going to have a special guest who comes in from Perch. He's the VP of Acquisitions. I'll bring him in now. Nate, thanks for coming on the show.
Hey, Stephen. Glad to be here.
Very cool. Well, you guys had some exciting news of late. You just raised $775 million to go out and buy a bunch of Amazon brands. I know publicly you guys have already purchased 30 brands, so you guys are already well on the way to being a dominant player. So how did you guys decide to pick that number, $775 million?
Well, it's 70 brands currently, actually.
I'll have to get my note updated. It was 30 when I last checked, so now it's 70.
I know every conversation I have makes me a liar because it's published a month later, and and there's been a lot that's happened in the meantime. But yeah, good to meet you. For listeners, one, if you guys didn't hear Steven's pre-music on the StreamYard before this, it's amazing. I want to get the soundtrack. It had me grooving in my chair, lots of trumpets.
We get that a lot.
It's amazing. And two, nice to be with you all. Nate Jackson, the head of acquisitions at Perch, have been with Perch since close to the beginning. I've known our founder Chris Bell for about a decade, and have been very happy to be with Perch from brand 3 to 70. So to miss the first two, but they're near and dear to my heart as well.
You're too late now. You're too late.
Yes. But Stephen, I think your question was on the dollar amount raised. Is that what you're saying?
Yeah. Yes. It's obviously a baited question. Let's see if you take the bait.
So yeah, we were very fortunate to have a lot of interest in investing behind Perch. So we've been at it for quite a bit of time, have aimed to be quite disciplined in buying great businesses that we can grow and learning what we can, and building a profitable business that grows the brands that we acquire. And we've been really fortunate to be able to do that to date. And so fortunately had a bunch of options on the table as we looked to expand our capital table and raise more funding. Stephen, I think in your past video, you gave us way too much credit on the strategy behind the specific number. We, believe it or not, without sharing too much, we took less money than we could, because we just we value our equity quite a bit, and so we're focused on what we think we want and need for the path ahead, and really I think we can go quite a long way with the cash that's available to us. It's a good thing for Amazon sellers. It's a good thing for entrepreneurs. What we've seen the way that we've seen this market develop over the past 18 months or so, the greater confidence that I have in our ability to grow these brands allows me to pay more than we did 18 months ago, and then the market paid 18 months ago. And so it's a good thing for everybody. Very fortunate to feel like we've got a bunch of runway. And yeah, in general, I've always said that our business is going to be paced by either access to capital, access to deal flow, or operational bandwidth. And now it is, has not been capital, absolutely is not deal flow. And so really what we're focused on is continuing to build out our team ahead of our growth. And that's where a bunch of the use of the capital comes. To date, we've been sort of building our team as we go, and I think we're accelerating our team ahead of the growth that's ahead of us a bit now.
So $775 million to buy Amazon brands is a lot of cash. You're the guy in the hot seat. You're acquiring all the brands. There's a lot of areas we could talk about today. Super excited about this. So anybody that's watching, if you have a question for Nate, leave it in the comment section. We'll start answering some of those questions here shortly. We especially would appreciate questions around Perch as a company, aggregators, market forces, stuff like that. And if Nate wants to, venture into other Amazon topics, he's welcome to as well. Yeah. So everybody's always looking for that secret sauce on how to grow their brands, of course. All right. So Thrasio raised 750 in their latest series. You guys are a dominant force, really on the heels of catching up to them. I suspect you guys aren't really paying a lot of attention to them, and you're probably doing your own trailblazing, but I have to ask, is there any target you guys have in mind, or anybody you guys compare yourself against to try and compete against?
Yeah, it's interesting. I mean, Thrasio is obviously, when we came into this market, they were kind of the only one, yeah, basically the only one that I was aware of when I was starting. And it was very, very easy early on to think about the competitive landscape when I was thinking like, oh, I wonder what conversation Ken is having with this other person that I'm talking to. And now I don't know the names of the 40 people that are out there necessarily.
I feel like there's like 100 aggregators. There might only be like 40 serious ones, but there's like 100 of them now. For anybody that's curious, if you want to learn more about aggregators, you can go to AmazonAggregators.com. We've got videos linked to when Thrasio raised their money, Perch when they raised theirs. Notice that amount's a little bit higher, so it's the most ever raised. Really big deal. I know Nate's underselling it, but I think it's funny. So if you guys are curious to see like the long list of all of these aggregators, as much as we know about them and what they're up to, they're a major market for us. That's why Nate is on our podcast today. We're very curious to see, how aggregators are tackling, their business model and how it may adapt or change the marketplace for all of us as Amazon sellers and companies that support Amazon. So,
yeah, and yeah, to just one of the last points you made. Overall, I think this development is an awesome thing for entrepreneurs. I think one of my favorite things about my job is, and I lose track of this from time to time, but then I have a conversation with the seller and I remember it all anew that like my interactions and like I have the good fortune that my sale pitch is trying to give somebody $10 million, right? It's like, it's
let me give you money. Come on.
The only sales job I've ever had was prior to this was selling hot dogs at Fenway Park. And I was selling bad hot dogs for $4.75. And, but I ran hard and held my bin up high and screamed loudly. It's still a challenging job to like figure out the best fit, find people and connect with people. But yeah, in general, I think it's an awesome thing for Amazon sellers that this, this new model that Perch is a part of and a leader in is having a really good impact for sellers. A year and a half ago, there weren't many people that could buy your business, and so if you did want to be done, you either had to stop, find the one person that might buy it, or just keep running it. And now having an option for sellers is really just a tremendous thing. And with more money coming to the market, we're paying more than we did 18 months ago, partially because there's more of market forces at work. And then also, we've got much higher conviction in what, when we're pursuing a brand that we know we want to acquire, what we can do with it. And it's easier for me to underwrite the ability to go pay somebody what we're going to pay them.
With $775 million in the bank to pull from, you guys also have a bit of motivation to get some yeses on those transactions, I would suspect. All right, so we're going to start taking questions from our audience today shortly. Before we do that, for somebody who's like tuning in, I've never heard of Perch before. Yeah. Who are you? What are you? What is this thing called an Amazon aggregator?
Sure. So Perch is one of the leading acquirers and operators of consumer brands. We've started off with our focus squarely in the Amazon FBA ecosystem, but we are going a bit more broadly now to consumer brands, just because it's more reflective of our portfolio today, where we've got brands that are selling into Target, selling into Walmart, selling some D2C, but the core continues to be the Amazon ecosystem. But yeah, really our mandate and our business model is to be the acquirer of choice. So somebody that's thinking about exiting and sort of having a transition plan where they can have an exit from the brand that they've developed, being somebody that is well positioned to run a transaction, to acquire their brand, and really more importantly, have an operating platform that we can scale these businesses and these brands globally to their fullest potential. And so that's where I think a lot of the magic is. I'd say my job is the easiest job at Perch. A lot of the magic happens on the other side of an acquisition, where figuring out how to integrate run the channel, run pricing and PPC optimization, run like a wildly complex and ever-changing global supply chain, where you're getting new suppliers every week, is really where the magic happens again. But yeah, we're aiming to be the consumer goods company of the future, and our plan is to buy brands that we want to own for decades and to build them and to build the world's class team that can continue that growth into the future. Myself personally, my role as head of acquisitions is everything from initial conversations with sellers. My team is having conversations every day with sellers from all over the world, figuring out where there's a good fit, structuring transactions, running the diligence and close process, and then there's an integration team that we work really closely with from there. And my background personally, I was at Bain & Company, which is a global strategy consulting firm. Just before this, I worked with a lot of CPG companies and retailers that were getting beat up by Amazon. And a big question was, how do we stop the bleeding? Amazon's crushing us. I didn't know it was, a mother and son in Israel that was crushing, this consumer personal care brand. I didn't know that it was a surfer in Brazil that was beating up this health and wellness category. But at the time, I just knew that Amazon was crushing it. And so when I had the opportunity, kind of learned about the opportunity from Chris Bell, our founder, who I'd worked with at Bain. He went on to do a bunch of, he was a leader in the supply chain org at Wayfair. When I heard about what he was doing, was super excited to dive in. And yeah, it's been a ton of fun in my role and really rewarding personally.
So you've been able to see a lot of businesses that come through the door. All right, so let's dive into some of our questions from our audience today. So Kevin says, "Good afternoon." Yeah, it's good to see you too, Kevin. We had a brief question before we started, coming in from David. Do aggregators also buy up smaller Amazon accounts, like $200,000 a year, having a website with sales attached? Is that a plus for them, or do they prefer no website connection?
Cool. So kind of two questions. I would say on the first question, there very well may be people out there. I imagine there are people out there who are buying a $200,000 a year brand. Perch doesn't. We're focused at kind of $1 million revenue plus, and even at the lower end, that would be the lower end of our range, and would want that to be a reasonably simple portfolio. But I imagine that there are some people out there that do. I would say for things like this, your best bet is Empire Flippers, Flippa are really great at getting a broad audience. Getting I'm an active customer of Empire Flippers, and I do focus on some of the larger deals on the platform. But I see every week, right, new brands that are in that range, and I know that those are trading. And so I don't fully know who is out there buying those, but I am certain, early on, a normal deal for us was the $1 million range, and now that would be quite a small deal. And so I'm sure that there are folks out there that may have a focus on the lower end or otherwise, but I think the best bet there is probably to call around, have some questions. I think Perch in particular starts at about $1 million of revenue and up.
Most of the aggregators I've spoken to, and I've spoken about 35 of them privately, behind the scenes. Usually it's every single one. I'm saying the same thing you are, Nate. Yeah. It's $1 million plus. So for those that are looking to sell a smaller brand than that, I would recommend a brokerage, just like Nate mentioned. I'm really fond of Quiet Light Brokerage, but I have nothing negative to say about Empire Flippers. There's a couple others out there as well. I would start with the brokerages because they have access to a big buyer pool at that range, in my opinion. All right. So,
there's a second part of the question about website connection. I think it's going to depend on the buyer. So there might be buyers who are saying, I've got my hands completely full trying to integrate the 10 Amazon brands that I just bought. I can't think about your Shopify site that's generating meaningful revenue. And figure out how to stand up a new capability. There may be people out there that are in that situation, and then there are others that where that might be a core part of their thesis. And so I was talking with a guy, Matt Rosenthal, who joined our team a few weeks ago. And he is brought on board specifically to drive email marketing and building out our customer list, figuring out how to cross monetize brands. So
and Amazon loves giving you customer data. Like they just
love it. They love it. Yeah, it's so easy
for you to contact them.
Right. And so that's really the only leg we have to stand on is brands that had some form of a sort of direct to consumer leg to begin with. And so I think not everyone, like there may be people on the one end of the spectrum who say that sounds complicated and it's like 1% of revenue. I don't care about that. Whereas Perch, we're excited about that. We're not today buying brands that are 100% D2C just because we are trying to focus on the core for a little bit, but that changes real quick. But we are sort of going deep in the direct to consumer capability building. And so I think having some degree of domain presence and direct to consumer experience is great. But what I would say is don't go spend $15 on Facebook ads for a $40 product that you're selling. If that's kind of not going to be the long-term profit generation model. We have seen that it's really hard to drive a ton of volume D2C unless your price points are north of $70, $80, your ASPs. And so, I'd say have a website. Don't worry about sort of driving a bunch of energy behind trying to eke out go from 1% to 2% sales on Shopify. I would say that your incremental effort is almost certainly going to be on optimizing the Amazon channel, optimizing your listings, getting that new product that your supplier has teed up for you. Getting incremental improvements in your core is where I'd encourage you to focus. But folks like us obviously are excited about understanding a business in its fullest sense. So,
what do you feel like the fastest way to grow Amazon sales is, Nate?
Make great products that people love and rank really well. It's really interesting. You see people that might have a good product that they kind of sort of day after day are grinding it out for 6 months to try to get some traction, and then other folks that are able to launch and sort of get to the top of organic and have made the massive bet to like have the stock to stay there within a month and a half, which I think is the harder part. It's easier when you already have something that's generating a bunch of cash to back that up. But when we think about growing Amazon businesses, I think there's two different things. One is like starting from scratch, and two is from the point that I'm buying it. So I guess I'll pause and ask the question: are you talking more about growing a mature business or growing a nascent business?
No wrong answer to that question, by the way. And I would say, both topics or niches on your sub question there are appropriate as well. So for a business let's go the mature angle though. So let's say I've got a mature brand, it's north of $1 million per year. What's the fastest way to grow sales from your experience? You've seen 70 accounts. Yeah. And you've seen the passover from the acquisition, turn it over to the account management team. I'm sure you get a couple emails here and there. Hey, we've doubled business year over year. And you're like, how'd you do it?
Yeah, sure. So the levers that we see, some are fast, some are not fast. Let's start with not fast and onerous, but super valuable is channel expansion. So geographic expansion. Every brand we acquire, unless there's some sort of clear reason why it's not a great fit in a new market, or there's some regulatory issue that makes it really hard to go sell something with borax in it in Europe.
Yep.
Yeah. Is getting products that are just sold in the US into Europe or vice versa. That is just kind of a clear thing where if you've got a winning product, when reviews are sharing right now, the last 3 or 4 weeks, I don't know if people have seen this.
It's been a big topic on our channel. Everyone's like, why aren't reviews sharing internationally? And it's been a huge problem, I bet.
We think that there's a path to getting it cured. We have some hypotheses on what's going on, but yeah, Amazon has a bunch of incentive to do that. Amazon is hearing that people are holding back on international expansion because of this, right? And so this is one where I think that everyone's interests are aligned in getting that back.
The timing of it was right around when they cracked down on some major Chinese fake reviews. Yep. And so I know they changed the algorithm in the last 4 weeks. I have another video I'm going to release here pretty soon about some of the indexing challenges that we've seen of late, category specific indexing issues. Real quick, you mentioned, some brands have a lot of success getting launched. This is a product I launched right before Mother's Day, sold $125,000 with a single review, doing my advertising, going into Mother's Day. Mother's Day was really interesting. There was 5 million people that searched for Mother's Day gifts this year, over 2x what it was last year. And that was up 2x from the year before with the COVID bump. I was really fascinated by this. So, it's very much possible still to launch a product from scratch and just nail it. This is a case example. For those that are interested in learning more, we have about a dozen videos where we cover this. So just wanted to briefly mention that what you had mentioned is absolutely true from my experience. It's still possible if you just have a really good product. It's possible to launch it. All right, let's go to Genius Lab here. My Amazon business also has a Shopify website and Etsy presence. How do aggregators handle those during a purchase? Should I integrate my bookkeeping across platforms to be built to sell?
Yeah, great question. I think a lot of this depends on the magnitude. So I see a lot of brands where at first blush they'll say we've got these 10 different channels, but when you get into it, it's 98% Amazon and 2% Walmart.com, Shopify, Etsy, eBay, Sears, whatever, Macy's, etc. And in that situation, frankly, it's the range where the acquirer probably isn't even sort of making a differentiation between the two, and they don't have to bet on whether they'll continue that or grow that if it's 2% of revenue, right? If you're saying that your business has 20, 30, 40% of your sales in a non-Amazon channel, that is going to be a different story. And so, we've got sort of different levels of conviction around different channels, and that may be true of every other business buyer as well. And so, if you've got the Amazon channel that's 70%, and you've got, say, somebody has knocked it out of the park, they have a really good traction with eBay where they're selling something that it's not a channel that we're supporting or investing behind. That's going to be something where, yes, we might pay for that, but at sort of a discount or a haircut.
The one thing that I think does really well on eBay is aftermarket parts, for whatever reason, motorcycle parts, you name it, whatever. Also precious metals. Number one thing that sells on eBay is precious metals, believe it or not. Used to work for a company called Atmex.com, American Precious Metals Exchange, and they were the number one seller, gross sales on eBay in the world. Fascinating. Yeah, isn't it? Jewelry does pretty good on eBay too, but yeah, I'd say a lot of products that do really well on Amazon can't compete on eBay just due to the price play and a lot of that. All right, let's go to the next question. Amrit says, how much would an FBA company be worth that's doing around $700 a day consistently for the last 3 months? Account is only 6 months old, profit around 33%. Probably not a lot of data to work with here, Nate, but what are your thoughts?
Yeah, the first thing I would say is every business is going to be valued on a basis of the trailing 12 months of profit. And so I don't think there are many people out there that are buying brands that are 6 months old. And frankly, it's in your interest to just, keep on supporting the growth of it, to build up, the more you can do to eliminate perceived risk, even if you've got an amazing run rate, the more you can demonstrate a track record and confidence that it's not just a good month. There's stability and reliability behind the ranking that they've been able to achieve, the better. And so really, when you think about what any business is worth, you want to think about your trailing 12 months profit, and then every business is going to be valued as a multiple of that. We've bought businesses in a very wide range of multiples. And that all comes down to both our confidence in the brand and our confidence in our ability to grow it, and the current growth path, right? And so brands that are growing tremendously month over month because you had 5 products that you launched 6 months ago that are just now taking the world by storm and they weren't there before, that's going to be reflected in a higher multiple than one that's got the same 3 products that have existed but are stable and healthy. But those are some of the things that factor in.
Does Perch have a favorite category? I know some aggregators are like, we really like this one category for whatever reason.
We've been opportunistic, I would say, and so don't have a totally perfect favorite category. We've got things in home and kitchen. We've got things in automotive replacement parts, repair. We've got beauty and personal care. I would say the theme of what our brand team can do the most behind is not about category, but more about positioning. And so anytime there's something that is a premium product where people really value something that is high end and definitively better than the competitors versus like I need a plastic thing and it looks like this, like that's where our team can go nuts on driving off channel demand generation, can really invest behind higher ads because the pricing will support it. We'll have just generally more opportunity to get that direct to consumer feedback loop where you have raving promoters.
I too hope American Made comes back. Are you guys going to stick any of that money into manufacturing at all, or are you just buying brands with it?
It depends on whether our supply chain head is listening or not. He has the hardest job in our company, perhaps only other than the account health team. You can pray for both of them. Anybody you know in global supply chain who lived through 2020, give them a hug.
I got a quote for a container last week for $23,000. I paid $3,500 for that same container 2 years ago. What the frick?
Is that to the US?
Yes.
Golly.
Yeah, the word on the street is the Australians are like hoarding containers right now. They're like gold. Nobody's shipping them back into China. I don't know.
They're selling them on eBay. They're selling them on eBay in place of gold.
You probably are joking, but it's probably also true. All right. Javier says current acquisition valuations. I hear some are going 5 or 6x sales. What's Perch's method to evaluate?
Good question, Javier. So I think every business is different. I'm sure that there are businesses that trade at that range. When I was starting this, the beginning of 2020, the range was between 2 and 3x, which is just was too low. It was objectively too low, and the market is a lot more active now that people are paying more. I would say that the trading range that you're seeing now, I wouldn't be surprised to know that there are brands that are trading at that 5x range, and 6x maybe all in with earnout components that are built into there. I think that what I've seen for the convergence around cash at close is in the order of 3.5 to 4x. Frankly,
that's what I keep hearing as well.
Yeah. So depending on the brand,
that's the market averages at the moment.
And then yes, like there are scenarios where with an earnout, with some structure of an earnout where you can get to a realistic outcome where you're getting 5x, or for a really large scale, sort of differentially positioned brand, again, with a good chunk of it contingent on future performance, getting into that range. But I think what you should expect for sort of a stable, solid size brand is that 3.5 to 4x range. But that's, it's an evolving market, and so yeah, it's ask me 3 months from now and I'll let you know then too.
Yeah. So speaking of the evolving market, there's a litany of thoughts that come to my mind in this last, conversation point. I have actually wondered if in January, I felt like it was a seller's market, but I honestly wonder and have questioned in the last 30 days if it has now flipped to a buyer's market. Do you have any comment on that?
It's a fascinating point, and I would say like absolutely Q1 of this year was a seller's market, as I and everyone else in the world was trying to come to grips with like who in the world am I competing against? Who is out there? There are a bunch of people out there that are, an offer that would have been a slam dunk 3 months prior, apparently gets beat badly by somebody else. And I think what you saw in Q1 was a lot of people have raised money. Obviously, I stopped counting at 40. Looks like you're still counting at 80, 90, 100 or whatever it is. And so there's a lot of people out there. If you can't differentiate, or you're just new and you can't differentiate on sort of a track record of delivering on a deal and on a growing brand, how do you compete? You compete by paying more and guaranteeing that you'll pay more. And that started to happen pretty heavily in Q4 and early Q1. And I think, frankly, that activated a bunch of the market. I think a bunch of sellers are smart, savvy people also who look back and said, I just had a pretty good year. Like COVID, I don't wish it on the world, but it was good to me as an Amazon seller, unless you're selling certain categories like travel that just got decimated, right?
I think that'll come back. I think we're going to see pent-up travel demand. If I was an aggregator with 775 million sitting around, I would go buy 10 travel brands right now.
Absolutely. But anybody who's still holding it may or may not want to sell it right now because it's been so low. But yeah, for the past year, I'm saying like it's been a really good year for many people. And so I think what you saw was a combination of things. Q1, bunch of sellers that were trying to do their first deals and saying like, screw it, I can't win anything. I'll just keep paying. I'll keep saying I'll pay more. And you know, the Perches and the SKUs of the world kind of paying attention to that where we need to and sort of ignoring it where it's like, well, I never would pay whatever they just paid. And yeah, that was a little unnerving, honestly, end of Q4. I think we saw it continue into early Q1. What we started to see was some deals that we lost come back around to us like a month later, where they said, this happened to us 3 times in 3 weeks, where
really
they had accepted, they had an LOI that was accepted, and the deal just never happened. Like they didn't get clear answers on why. And they eventually just had to walk from the process and
money
came back.
didn't come through or something.
Yeah, I don't know fully what went into it, but I think you saw some choppiness there. Too soon to tell exactly how that plays out. Those are like 3 data points is not enough to draw a conclusion on. I would love to hear like in your other conversations if that's common or not. But then you flash forward.
I've heard a couple of instances of that, and it's like Texas Hold'em. You got to pay to see the cards, unfortunately, so we won't know for sure. But all right, let's go to. Oh, go ahead.
But yeah, to your question of flipping to a buyer's market, I wouldn't say by any means that we're in a buyer's market, but I will say that the level of interest in selling brands to Perch currently outstrips my physical bandwidth. And if you're in my inbox and I haven't responded to you, I'm sorry. Inclusive of my mom, Linda, I'm sorry. I'll call you, but my email is nightmare. So it's been a pretty active market, and yeah, I think there are situations where 3 months ago we would have said like, yeah, let's figure it out, and right now it's just, hey, if it's not in the strike zone, we're just too busy.
Have you had to hire like a 20 people acquisition team to keep up with it, or?
We have a six person acquisition team plus me, so seven person team right now, and I think that's about right. Like we've managed through the ability to do literally 15 deals at once with that sort of smaller than that team, and that it was not something I aspired to repeat because it was very, very hard. But I think that we're basically right sized, and I would always rather give the incremental team member headcount to our operating team, to our supply chain team, to our tech team, to our brand management team, because again, I think I've got the easiest job. It's a very hard job, but it's the easiest job at Perch. And I think our key areas of investment are in sort of building out the capabilities of the business.
All right, let's go to Nathan here. How does your technology set at Perch apart? Every aggregator talks about tech vaguely, but are there any statistics that point to your more efficient model due to your technology?
Great. Yeah, so to the point, I absolutely think that in order to do this really well, you need tech. And the thing with 100 folks is that 100 folks should not make the investment needed to build the technology that we need to have to do this really well. And so that's where I think it'll be really interesting to see how the market develops, because critical to getting to sort of the full scale is exactly what we're talking about here, which is building a technology platform that gives you first visibility into how 100 brands are doing, gives you the optimization tools to place fulfillment orders, for 100 different brands to like do all of the things that you need to with every API possible in Amazon. And there's no software out there that does that perfectly. There are third-party softwares that do every piece of it. But to the question on data points, I think, like I said, 7 out of the 80 or so people are on my team at Perch, but 25% are in product or technology. And so I haven't fully tracked everybody, but I think that is an outsized investment relative to most folks that are out there. It comes from Chris, our CEO's background. He was at Wayfair and just kind of maniacally pushed for tech investment to do the scaling that they went through, going from like less than $1 billion to $15 billion. It's just impossible to try to play catch up by doing more with people that you're also onboarding and are brand new, right? Like technology is going to be better at solving these problems at scale, because we are solving a bunch of problems all at once. But once you do solve them, they're literally digitally scalable. And so part of the data point would be our team size, and then also I think we've bought 70 brands, and we have 80 people, and we've done that well. And I think that is entirely enabled by our entire tech team, who has built things that allow our ops team to run smoothly, given our brand management team the visibility and the tools to dynamically adjust pricing and advertising spend in a way that is just hard to do across so many accounts, right?
It is. We have 160 accounts at my Amazon guy. And so I know all of the pains aggregators experience quite well.
Yeah.
So yes, there's a scale of no return. All right. This question comes in from SC Trojan Baller, who's a member of our YouTube community. Thanks for supporting my Amazon guy. What is the sweet spot as far as number of SKUs? I heard you have to keep launching products, but it also sounds like aggregators like simpler portfolios.
Yeah, it's something we talk about a lot. And recently, my proxy for what's a good, simple business is less about SKU and more about supplier. Because what we've reflected on is that the complexity of the business, yes, partially scales around SKUs, but our tech is solving partially for that. Not entirely. It's still easier to have fewer products. But really, it's hard to fully build tech around, like if you just have 14 suppliers that all need a different way of interacting and sort of have love that you need to give them in a different way, or like interact with, negotiate. And so I think the biggest piece of advice I would say on simplicity is like, think about what it will look like for you to transition this business. And if you've got 40 SKUs, but it's across 2 parent ASINs and there's just 10 color and size variations, but it's 2 parent listings that you're monitoring, it's actually not hard, right? Like we have one of the first big SKU brands we bought was a brand called Satina Leggings, which is my favorite Perch product. Probably because I just never worn leggings before I bought these, and leggings are amazing.
Do they come in men's? I honestly don't know.
Unisex, one size fits all, unisex. I should send you a pair. We should make sure that
sure.
That we
I'll send you a mag t-shirt.
That sounds great. You're on it.
Here's what it looks like, by the way. It's a really nice, the fabric, I have to admit, I shopped around, I tested 20 t-shirts to purchase the My Amazon Guy t-shirt.
Meticulous.
Yeah, very much.
But yeah, the thing with this Satina brand was that there are 350 SKUs, which at first I was like, I can't do it. But we realized, seven parent listings, at 7 listings that you're worried about ranking on and driving advertising to, and actually 1 supplier, right? And so on the surface that sounds hard, but when you get under it, it's a reasonable complexity load. And so the simple heuristic that I have is $100,000 of revenue per SKU. That's not perfect because, like I just said, it can be about other things that go into the complexity of the brand. But I think having the ability to call a failure, and that's fine. Like we all have failures. Like if you launch something and it's straggling along, for yourself and for your own benefit, like being willing to call a listing and reinvest that capital in behind your hero, I think that's a good thing to do. You won't have heroes if you never launch anything, and so I think it's good to go try and rank on new products and get new winners, but also just be willing to sort of cut losses when you've got something that's just bumping along at minimal profitability too.
The next question that came in is very similar to one we just kind of handled. If you want to nuance anything here, feel free. So this is from Be Driven Sports. Do you see any point where ags will become more interested in brands with vast catalogs with thousands of SKUs? And do you see any interest in FBM operations growing to take advantage of opportunities such as utilizing virtual bundles with in-house inventory? I happen to know a lot about Be Driven Sports. I know the owner. And so they have some arm sleeve similar to the leggings. I think you might like this brand.
Yep.
Go ahead.
Yeah, give me a call. Yeah, love it. A very relevant question. I was talking with Colby, our head of business development today. Not to give away our special sauce, but yeah, we view this as I think Be Driven Sports don't know your name, but if you called a lot of people today, I think it might be an automatic no from them, just based on like, I can't get my head around what it looks like to manage a 5,000 SKU portfolio, regardless of what the storefront looks like. But yeah, awesome products and good listing, great reviews, good review counts, right? So it's a really awesome business that I'm sure you have built a bunch of operational, if this is your store, a bunch of operational skill sets around, like, how do you do this with not a huge team, probably. And I think right now there are very few people who would look at this and say, yeah, this is a perfect fit for me. But as I said, 25% of Perch's team is focused on tech. SKU complexity is one of the simplest things that I think we can solve. Again, if you're doing all of this from 2 or 3 suppliers, and it's more just about a matter of figuring out how to make sure that we can have a human engage with the visibility of monitoring that in an effective way, which I think we're frankly like pretty close to, but still prioritize simpler businesses. I would say that in the next 3 to 9 months, you're going to see folks like Perch expanding what they're open to and excited about doing in terms of SKU complexity. I think the thing that always breaks our supply chain's hearts is when you've got like a complicated kitting process where there's 9 different suppliers that send parts to this one place, so that you have to order caps versus markers versus this thing versus that thing differently. But yeah, I think it's coming. If it's not here now, that's definitely coming. So keep on doing your thing, keep on growing your business, and give us a call. And likewise on FBM operations, we talk about this all the time. Like, FBA is wonderful when it works. It's so frustrating when you're just told overnight that you have 50% too much stock, and you and you can't send anything in for a business that's doing really well, right? And so having scale FBM operations, I think, is important. Our exec team is heavily coming from the supply chain team at Wayfair, and so this is a group of people that stood up 50 warehouses in the span of like 18 months, and we have a large warehouse today where we have some capabilities, but not at scale for our full portfolio. But I would say yes, like we're driving hard against that capability. I'd say it's rare that a Perch is going to acquire an existing FBM operation and take it over, because we probably want to build it, build the capability ourselves. But there may be other folks that would be excited to take on that capability if it is in fact an advantage, which I think it is.
This next question comes in from Dick. He says, will aggregators start launching brands and products from scratch, or will they always buy ready-made brands to develop further?
I don't think of it as an or. Thanks for the question, Dick. I think both absolutely will continue buying brands. Otherwise, I'm out of a job. So I'm going to really try to make sure that keeps happening.
I think the question really boils down to, is it easier to buy a brand or start one? And right now, it's easier to buy one.
Yeah.
If you
it is. There's a bunch of opportunity to buy brands. I do think, and we, any given leadership team will probably have differing points of view on where the highest and most opportunistic place to spend your capital is. We do believe that it's really hard to build winners, to build like complete winners in the market, and that the single best use of our dollars can be keeping our hero ASINs in stock and pushing them into new channels and optimizing the reach that they get. Because if you've got a really proven high converting product and you can expand its reach, that's the number one best thing we can do with our capital. And I think there may be a point at which we say we've got similar confidence in a repeatable playbook around launching products or brands. And that time may come, but right now the sort of the thesis is proving out that buying winning products and sort of optimizing aspects of them is super valuable, and we're going to keep doing that. But at the same time, like I said, with the comment on supplier complexity, once we have suppliers that make a great product, we've got a brand in a niche, and we've got the ability to, Amazon obviously, and we can launch products. I think there is a bunch of room to take up more room on the SERP, right? So some of my favorite brands are where we have 4 listings that all show up individually in the main page of some of our key terms, and we really dominate the page. And so that can be a strategy that we, for example, would repeat where it's something that makes sense to do that versus variations, for example.
Nate brings up a great point. Parentage theory, very big topic. Like, when should I parent? When should I not? Nate just outlined when you should not parent. That is when you have listings that can dominate search at the same time as other listings. So I usually like to say, if you have 2 hero ASINs in a parentage, split them out. So yeah. All right, let's go to Javier here. Does Perch have their own fulfillment warehouses, or do you use third-party 3PLs?
So we have both. Part of our model is that we buy businesses as they are, right, in the moment in time. Whatever's going on, we're inheriting for a period of time. And so we have dramatically more 3PL relationships than we want right now, and we'll converge those down into our core operations over time. And we also have at least an operated warehouse today as well. It can't take all of our volume today. And there's scaling challenges to sort of building out the warehouse team to sort of fully go and do that when your business is doubling every 3 months or whatever it is. But I think this is something that we're sorting out real time. But I think we'll continue to have more and more self-operated facilities, have more FBM capability, more control over our warehousing in general, just so that we're an important client for our 3PLs, but still we're in the same boat you guys are, where you ask them to ship something out and it could takes like, why does it take 4 days to do this? Like, I want to get into your facility and see like
4
what
days
the heck
would be
is going
great.
on.
Yeah. The whole supply chain's a wreck.
And so I think having the control or the illusion of control is helpful, but is also a huge complexity challenge. We have a theme. We hired our first leader of owned assets, of warehoused assets, and he's kind of flying all over the country right now to the facilities that we do operate. And so that's something that we're scaling up quite a bit, and frankly is super helpful. Just as all of you guys know, if you're Amazon sellers, presumably, supply chain is the worst. It's so complicated, so hard, and the more control you can have over it, the better, the more visibility. It's your problem to deal with when the pallet tips over, the forklift runs into something, but problems come up no matter what, and it's at least good to know what's going on.
Yeah, my warehouse last month, the owner of the warehouse was driving the forklift, and they forgot to put down whatever the part is that keeps the safety. So if you run into one of the now I'm forgetting all my vernacular. My supply chain skills are weak compared to my marketing.
Yeah.
But the shelving units, they all fell down, and thousands of dollars of product just went everywhere. And so,
Wow.
so yeah, when you run your own warehouse, there's a whole set of rules you got to remember. All right, so this question comes from me because you got me thinking here. So when you are as large as you are at Perch, you obviously deal with fast scaling questions, complex scenarios. Do you guys have like a weekly or bi-weekly meeting where you just like, here's all our big problems, let's bring in all of our smartest people and just talk them out?
Yeah. Yes. So each team has daily touch points, right? Where we do try to hire smart, bright, excited people to our teams, and we've done an amazing job of doing that. I think I know personally on my team, everybody on my team is smarter than me, which is great, and it's a good goal for me to have. But on individual teams, obviously we're working together really closely. There's a bunch of cross-team collaboration. At the leadership team level, we do have a weekly staff meeting where the first 7 minutes of the meeting, after hellos, we basically just go into a doc, write down what's on our mind, the biggest, thorniest issues. Early on, we could actually talk through all of those things when there were 4 of us. Now that the exec team is quite a bit larger, kind of lay them out there and then bold, okay, what are the things we actually need to talk about, right? So there are some real-time decisions that the team needs to make, prioritization that needs to be made, and that's where that happens. It's always insufficient time, and I think anybody that's in a market that's growing this fast is always dealing with insufficient time. And so I think that's one of the great challenges of building this business the way we are, is managing complexity and doing the 1,000 things that you'd like to do in the 24 hours a day that you have, of which at least 6 should be sleep. And so
sleep would be a good thing.
I'll let eating chips.
Yeah, there you go. This question comes in from David. I'll handle this one. So, isn't it a huge risk to buy an Amazon business, knowing Amazon can axe you at any time? So David, I think that this was on everybody's mind 2-3 years ago, but nowadays, really not. Amazon businesses are now respected, well valued. They're coming in at 3.5 to 4x on EBITDA. All of those reasons, and Amazon's not like willy-nilly suspending accounts these days. You can also run multiple accounts now. We have a ton of literature on how to run multiple accounts. Nate, if your team hasn't been using an OTP authenticator Chrome extension, I got an article for you. Your operations team will love it. Be a huge game changer for you. All right, so we got a few more minutes to answer a couple more questions. I'm going to go to the next one here. So Flying Swine Seasonings, we just posted a testimony from Joe on Saturday. Joe, you are such a sweetheart. Thank you so much. We appreciate your business. Current client of ours. He asked, do you buy out brand owners completely, or do you keep some on to help develop the brand further and expand the brand offering? Joe's a brand owner you'd want to keep on, by the way, if you bought his brand. And let's see. He asked a couple questions, but we'll hold there. Go ahead.
Great. Yeah. So my approach to every conversation with the seller is to try to understand what they're prioritizing and figure out whether that's a good fit for a partnership with Perch. The vast majority of people that we've bought a business from and that we end up partnering with have wanted to actually be like, yes, some reasonable transition to make sure that the keys are handed over well and the pipes are all connected, but ultimately that they want to be bought out completely and move on in some capacity. There are situations where, our biggest, most complex businesses, where I'm talking about, multi, I guess 8-figure profit businesses where there's just a lot going on, and there's 4-month transition is going to be successful to affect that. I think virtually all of those deals will have a transition component that's more like a year time frame to make sure that every given moving piece goes with it. But for folks that are not in that 0.1% of brands that are at that scale, is that still an option for me to have a partial investment or to stay on in some capacity? I would say yes. Talk with a member of the Perch team about what you're solving for and figure out whether there's a model.
What do people normally solve for? Is it money, time, and what else?
Money, time, and pride of the brand. I think a lot of people want to make sure that their brand is going to go into good hands and be well taken care of. And
so sentimental. Okay.
Yeah, that they're going to be proud of seeing it go on and flourish. But money's probably more important. to be clear.
What about skill? Do any brands sell to you because they feel like we just don't have the skill set to take it to the next level?
Yeah, I think it's common that people get to a certain point, quite often around the $5 to $10 million range, where it's in order to keep going, I need so much help. I need a team doing this, and therefore I need to figure out employment law, and I need to expand into Europe, and so I need to do all this VAT stuff, and that makes my head hurt.
Yes.
And what is German packaging requirements for a beauty product? I don't want to think about this anymore. And so it's not about capability. It's more about time in the day and do I want to scale up and have a 10-person team to grow this, or should I actually just recognize that I'm about to make $10 million and that's more than I can spend in my lifetime, and I know how to build a brand from scratch. I can go do that again. Our non-competes are pretty broad, and I think that's true. I don't know about everyone else, but as long as you're not competing directly with a product that you sold to me, go at it. I would love for you to go back, build a new brand, and
sell another one to you in 2 years.
Yeah, exactly.
Awesome.
We've done that once so far.
So I've actually survived one relationship we currently have. We've survived 3 owners. So they sold twice, and each owner has recommended they keep the agency on. So it's really cool.
Wow.
It's fun to have that. An average agency relationship, not speaking of Amazon agency, but just any agency is usually somewhere between 12 and 18 months. And so once you rack up a few 3-year deals, you feel very proud of that relationship. Javier asks, when it comes to acquiring a brand to transfer trademark, is it best to have the trademark under owner name or company name, or does it matter either way? I'll tackle this one first. You can weigh in. So we have filed more than 300 trademarks at my Amazon guy. Small plug. At least 6 or 7 people in the audience listening right now have bought a trademark from us. Feel free to share your own sentiments and thoughts. I would recommend you file it under the company, 100%. And that's because when you sell the company, it goes with it. You don't have to file any paperwork, no trademark transfer fees, nothing like that. We have about 20 FAQs on all things trademarks. We'll probably add this question into the FAQs because that's a really good one. So thanks for asking that, Javier. Any additional thoughts on that one, Nate?
I would just say that it is always cleanest if the legal entity on the account and the legal entity on the trademark is the same. But also, if you don't feel like you have to go do anything differently, if you've got your name on the trademark, we can handle all of those situations in the legal process, and it's the trademark assignment piece is probably the most straightforward of any of the legal discussions. So
I would second that.
Barrier.
Yeah, we got a trademark attorney we use, and we do transfers all the time as well. But yeah, if you get anybody that doesn't have a trademark or is opening up a second brand, feel free to hire my Amazon guy. We'll get your brand registered in under 7 days, and we'll file your trademark within 1 business day of you contacting us. All right, so let's go to closing thoughts here, Nate. Nate, I think you've been a great interview. You've shared a lot of interesting insights, and that I don't even know if that's a word. I just made that up.
I got it all nice.
So I'll have to go define that one. Throw it in the Stephen Colbert's Truthiness book. All right.
Yeah.
So Nate, any closing thoughts that you have? If somebody wants to get in touch with Perch, where should they go, or anything like that?
Yeah, sure. You can wander into the abyss of my inbox. I'm kidding, not kidding, but my email personally is nate@perchhq.com. Anybody is welcome to reach out to me. If I'm not the right person, I'm happy to pass you on to somebody from my team. You can more appropriately probably or more reliably go to our website. There's a contact form. Somebody from my team is there to be in touch, whether you're like saying, hey, I think that 18 months from now, I want to sell a business and I want to think about what I should be doing now. Or if you're sort of actively considering it, that is an option for you to do right now as well. And yeah, overall, awesome community. We always love connecting with people from all around the world, trading notes about the space. And I think I've never regretted a conversation I've had with the seller. So reach out, get in touch, and overall keep on the good work. I told you guys to pray for our supply chain head and our account health head. I know that that's you for both roles for your business. So I'll think of you and give you a virtual hug too, because I know it's been a crazy year for all of us, but also a good year for hopefully most of us in a lot of ways too.
Well, Nate, it was a pleasure having you on the podcast. Thank you so much for joining us. Feel free to send this to all of your friends and buddies, guys out there who are listening in.
My mom. My mom.
Yeah, Nate's going to send it to his mom. So if it's Nate's mom material, it's good stuff. So that's our My Amazon Guide podcast. We will, for those that follow our super fans out there, they know I'm about to have a baby. Still no baby yet. Tomorrow we have another podcast. We're bringing on Ian Sells, and that's going to be an interesting podcast. And then on Friday, we'll have our typical Q&A session. And then the next 2 weeks, I will likely be taking a break from podcasting. So thanks for everybody who's watching. And you guys all have a great rest of your week. And that's the My Amazon Guys show. Thanks, Nate.
Awesome. Congrats, Stephen. Excited for you.